Do you feel like you're working so hard in your agency business and feel like cash flow is always the challenging part? Well, hey guys, it's Lynn Padetti here. Now in this video, I interviewed Michael Wark from Bean Ninjas, an expert on guiding six-figure plus agencies on their growth journey. Now, as a chartered accountant and virtual CFO, Michael helps agency owners focus on what really matters to grow profitable and fulfilling businesses. Michael shares some amazing tips like the rules of thirds to help us know how to price our services and make sure it's profitable, and how to make sure you have money to pay yourself, how to be financially prepared for hiring staff, and other specific tips for agency owners. Hey Michael, how are you? So good to have you here today.
Yeah, thanks for having me. I'm happy to be here and excited to have a chat.
Well, let's get straight into this topic actually, because I know so many agency friends and people that I started as an agency, so I kind of understand the problem that agencies face. And then this is kind of very vital because it's the livelihood of your business. And the topic is around how to scale your marketing agency business and really understanding your numbers so that you can actually see profit at the end of the day. So I couldn't think of anyone else better than you who specialize in that. And so, yeah, thank you for being here and helping us through this difficult problem here.
Yeah, no, I'm excited to chat through it. Hopefully we can cover some ground and deliver a bit of value to our listeners.
Okay, so I guess you've worked with many agencies before. Like, what would you say is the main reason that people end up not being profitable or not even being able to pay themselves?
It can be a combination of factors, but a key common thread is that they don't truly know the performance of their business, and they're kind of operating out of their bank account, and they've managed to get to a certain level just by, they know they've got enough clients and they kind of know they spend a certain amount, but they don't truly know what's happening in the business. And they've kind of chugged along at a certain level for a while, and there still seems to be money left in the bank account, which is great. But it's actually truly having an understanding of all of your commitments for that business, including your tax, including paying yourself a wage, which a lot of founders don't do to begin, and then paying your staff fairly and making sure that all of that is in the right balance.
Yeah. So most people probably think, well, I have an accountant and he does my accounting or my books. Then what is missing then? What is it that's missing between what an accountant does and maybe someone else that's like a CFO or someone that can actually show you the numbers?
Quite often, if you're paying a tax accountant, they might submit your business activity statement and they might do your end of financial year tax return, but they're not truly analysing the performance of your business and trying to feed you back information about how to improve that, or proactively give you warnings about what's happening up ahead, where there might be problems or there might be cash flow shortages. So where I plug in as a virtual CFO is actually being that kind of partner with the founder and kind of joining the management team and holding them accountable and also giving them better data to make decisions. So I kind of trying to help give them more information and empower them with it.
Yeah, I get what you mean, because I've worked with people claiming they're, financial people in the past, and all they did was just present me the numbers. And I'm like, okay, I know my numbers. Okay, then what, right? And so I guess for you, you could tell me, like, what are the key metrics that you're looking at that you analyze for people? What would a typical monthly look into the numbers?
It can vary a little bit depending on their priorities, but generally, obviously, we're looking at their top line revenue. That's the number that most founders will know on a monthly basis. We're also looking at net profit at the end of the month for that period. One really key one that I look at, especially as my agency clients start to scale and start to add team members, is how much they're spending on their staff or their labor costs compared to their overall revenue, and monitoring what that percentage is and making sure that that falls within an acceptable range. Because for most service businesses and a lot of agencies, a lot of it is people-based, and you've got to have a team to deliver good work and you've got to pay them fairly. So it's just making sure that your prices are set at the right level and your labor costs aren't too high. So that margin in between, you've got enough to pay your overheads and also keep some profit at the end of the month.
So when you're saying reasonable percentage there, what is that reasonable percentage?
There's an old adage that's the rule of thirds, which is a third for wages, a third for overheads, and a third for profit. I've found that's a great starting point or a benchmark if you're just beginning. And it quite often works quite well for sole owner operators or people who are just using a few contractors to get started. But as your team grows and as the business grows, that percentage will grow a little bit as well. So I've seen healthy, profitable agencies with labor costs making up about 60% of their revenue, but they're at a bigger scale and they don't have a lot of overheads. But I would say, ideally lower than that, 45%, and then, pushing down to that. But it depends on the team mix up, if they're delivering highly specialized work and things like that. So every situation is different, but I'd say between 60 and 33%, ideally closer to 33.
So does our salary get included in the profit or in the overhead, like as a business owner?
Initially, for the audience playing home to begin, I would just lump all of your wage costs, including yourself, in that labor cost. That's quite often because the founder is still doing operational work to begin and you're still delivering client work. So I would track that in that labor cost. As you grow and you kind of move from just the founder into that CEO role and you're more management rather than operational, I use a kind of a dashboard to track management labor separately and track that in relation to revenue as well. So that's kind of a separate metric we break out once the business gets to that level where it's got a management team.
And so how do you ensure that as a business owner, you're compensating yourself right, that you're not always reinvesting everything you have in the business again, and you feel like you're always working so hard, but not really seeing any, satisfaction of results for yourself?
It's a common struggle, that treadmill of I'm working harder than ever, but the cash in my bank isn't growing. That's where we kind of look at a review of the pricing and working out, is your pricing correct? And is there enough margin built in there to have cash left over? I mean, there's multiple ways to dig into that to work out how they're going. Profit first is a really popular cash flow management strategy, especially for kind of founders and kind of sole owner operators who want to just get started with a kind of really simple system. So profit first is based on a book, and I'd recommend listeners having a read of that book and applying it to their business. So that's like a really basic way to do it. But kind of, if I put on my CFO hat, we're going to be looking at like your overhead expense analysis, what your pricing is, comparison to your competitors, and then also looking at, your staff costs and how you're charging out your staff as well in terms of their charge out rate versus what you're paying them. So there's a lot to dig into in terms of driving that profitability. But yeah, at a high level, it would be just making sure that everything is in a decent balance, and profit first gives you a good benchmark about what percentage you can have to pay yourself versus set aside for taxes versus the other things.
Profit first is such a transformational idea that I've implemented thanks to you as well. And it comes down to most business owners have one bank account, or if they're lucky enough, they have a GST account, which sometimes they move things out and then they move it back in because they're not managing their money well. And so profit first is really about having different buckets. Can you kind of elaborate around the importance of having these different buckets? Otherwise you dip into the one bucket and you think you have money, but you actually don't.
It kind of connects to a really deeper psychological level. Back in the day, a lot of people may have seen their grandparents use envelopes for different things in the family's life, or jars for certain costs in their life. It kind of builds on the Barefoot Investor kind of ideas, which is a very popular personal finance book in Australia. It all plays into the same human psychology, which is kind of out of sight, out of mind. And once it's in that separate bucket, you don't touch it, because it's so hard for us to decipher what that 60 grand cash in bank is made up of. But part of that, as a business owner, will have to pay your GST. Part of that should be set aside to pay your income taxes at year end. So there's all types of other things that make up that amount. So it splits it out to make it simpler to work out what should be left alone and what you have to play with in terms of operating expenses, or if you need to buy a new laptop for the team, you can kind of work out actually how much money do I have for that.
Yeah. And I guess having an accountable person like yourself in the business to kind of go, okay, well, this is the allocated percentage, and you kind of know that you have someone watching over you. But if you are just on your own, I could imagine even if you had the bucket, you might end up being lenient on yourself and go, let me borrow here, borrow there, right? But I think something like this, having a coach like yourself would be very valuable. Would you say that's important?
I think it really is as you start to grow and scale. Definitely, as you start to build teams and come into those more complex problems. Some of my clients just like having the accountability and having someone there to run problems past, instead of that kind of lonely journey as the founder where you've got to make all these things yourself and you're not 100% sure if you actually can afford that or not. But if you don't want to roll out a full system with multiple different bank accounts, If you're in Xero or an accounting platform, just analysing your profit and loss and working out, what your overhead expenses are as a percentage of your revenue. Make sure that they're kept below 30%, ideally pushing down to kind of the 20% range is a good start to work out, am I spending too much money on my overheads? And, do I need to trim them down?
Oh, that's such a hard area to do, trimming down the fats and getting rid of stuff. So back to the employee side of thing, like when is it a right time to employ? Because I'm guilty of kind of following my heart more than my head. And there are many times where I've just employed people and knowing that, because if I employ them, I'm going to make more money, right? They're going to be a return on investment for me. But it really did hurt me for a while because I didn't work out the numbers first and then go, okay, I can afford this person. But it was more of, let me invest and then they will make more for me. Do you come across something like that? And any insights into that?
I definitely try and recommend my clients hire when there's a need rather than for future growth, because you've got a staff team member who isn't doing chargeable work. So it's all about making sure that that person you hire is doing chargeable work or is bringing in revenue to the business. If you're hiring 3 admin people and they're not actually contributing to your top line, that's going to add to your overhead costs. And if you have budget for it, that's great. But if you don't, it's going to start weighing you down. So what I generally do in this kind of thing is perform a scenario analysis. So we run a bit of a cash flow forecast. We say, okay, let's imagine the business for the next 12 months with this additional wage cost and see what it looks like moving forward. If there's, say, a sales team member, perhaps that will result in a larger revenue balance because we're hiring them to grow the business. And then maybe you can assume that the top line will grow with it. But it's just making sure that you run through all the scenarios to make sure that, yes, we can sustain it. Another way to look at if we can afford this is to make sure that you're already profitable. So you're already making 10% net profit at the end of each month, which means you've got a little bit of money left over each month to perhaps put towards a higher wage cost. But I would never look to be hiring more people if I'm under 5% net profit in a break even or a loss. It's not the time to be hiring someone unless this is a Hail Mary and you need to dig yourself out of a hole and you really need to pull all stops. Generally, you want to hire from a position of strength.
And, when I first started my agency back 10 years ago, I also fell in the trap of, at the beginning, when you don't have a business, the bank won't just let you borrow money because it's like you don't have a proven model. But as you start to make some money, the bank starts to go, hey, do you want to borrow? You can borrow a bank overdraft and you can invest in your business. And I was so gullible and thinking, okay, I'll just take that money. And then I just wasn't using it effectively because it's almost like you felt like it was free money and then let lurch it. So what's your viewpoint around business loans or borrowing money to invest in? Maybe you haven't been around for too long.
It needs to be very well thought out. I personally come from a conservative standpoint where unnecessary debt is dangerous. And although interest rates are super cheap, it's still something you need to repay. And that interest expense will weigh on the business. So ideally, if you build up capital reserves because you're a profitable business, you can build up a vault or build up, a war chest of funds that you can use for these future projects or these investments. But that involves being profitable and then putting aside funds each month to build up that war chest to help you with your future growth. So that's kind of building internally. Although, I work at a startup hub here and they take on mounds of investor cash and debt to try and build their business and scale. But I think in the agency world, I think you need to be based in reality and really think through, why am I borrowing this money? What's the specific purpose? And what will be my future return on this capital? So one calculation, if people want to look it up at home, is return on invested capital. And it's making sure that this cash you get from the bank is going to return more than you're paying the interest expense and then more margin on top of that. So it shouldn't just be used to fritter away or to give you an extra buffer, because you'll end up just with repayments and an interest expense weighing you down further down the line. So it needs to be for a very specific purpose, and we need to know that purpose is going to bring in a higher profit in the future.
And that's why having a coach is so important, because back then, of course, I was on my own, making my own judgment, just doing whatever I please, end up booking a holiday with the money, saying, well, I might never with some people. But if you had a coach that really questions you and go, okay, what is your intention with this? It would have been very different, I think. When you don't have money, you have to think very resourcefully.
Yeah.
Smart, wise. And that's why after that experience, I've really learned to I'd rather have no money to then pick my brain and figure out a solution than to go and just get, ask someone for money to throw it into the business, because you haven't really solved the root of the problem yet, right?
Absolutely. And if you scale with that money, but you haven't solved the key root of the problem. So say, for example, the root of the problem is that your pricing isn't correct and your actual services aren't profitable. Like you pay your staff too much, you're scared about giving your clients a price increase, and so therefore you're not making enough margin really. Then you get this bucket of free money from the bank and you say, let's scale, that will solve our problem. You're going to hire more expensive staff and still not be profitable. And so you're going to grow your problem. And if you start to turn a loss, that's a bigger loss because you've got more staff members. The stakes get raised when you have a higher payroll. And so you're basically kicking the can down the road to face an even bigger problem. So what I really like to drill into my clients in terms of their mindset is make sure you're paying yourself a fair wage, a market-based salary. Make sure you're paying your team members fairly and a market-based salary, and you're still making a profit and delivering good services to your clients. And only then, when we're putting aside funds for taxes, we're meeting all our obligations consistently, we're in a position of strength, we can really scale and really grow from that position. I don't like people who want to grow their way out of profitability problem, because that won't happen and you'll just create a bigger problem.
Yeah, I love that. And I really love that you're really thinking holistically. You're not just going, okay, well, this is your number, blah, blah. You're going down to the root of the problem. So I guess, what are some of those core problems that it has to be fixed first before you can actually fix the numbers?
It all depends on the business. I've seen lots of different problems and depends where they're at. Quite often with agencies, it's getting the mix right with staff profitability and staff productivity, and making sure we've got the right people in the right seats. Yep. We're paying them fairly and they're also being charged out at a good rate. Making sure that you're not doing free work or kind of just add-ons for people who just want a little bit more and want a little bit more, because that drains your team members' time that should be on another chargeable piece of work. So for me, driving the profitability in agencies is about humans and about people and how to inspire them, make them productive, and make their goals visible without actually trying to be kind of negative and show them you should be working more billable hours. It's about trying to inspire them and create a team environment where people want to hit goals. That seems to be the key underlying feature, because there's only so far you can cut your overheads down. Once you've reviewed them, you're not paying excess software, you've reduced your office rent if possible, and you're kind of working remote and you really streamline that. Once you've done that, you can only get so far with that. And that's where trying to manage that wage cost versus client delivery, that becomes the bigger conversation.
Yeah. How about the problem of their business model? So I know when I first started, I was an agency, but I offered everything because, look, I can always find someone to do SEO, website, blah, blah. And I was saying yes to so many things, becoming not master of anything, right? So that became a problem. And there were also projects that I realized weren't recurring. So I was always going to feel like pressure into getting more clients. So did you come across like that with agencies where you kind of have to help them with that first before they can hope for more sales?
Yeah, definitely. A really great book that kind of covers a lot of tips for any agency owners listening to this is Built to Sell.
I love that.
Yeah, it's a really great book. And it talks about specializing in what you're good at rather than being, jack of all trades and not really delivering great work anywhere. It's about doubling down on what you do really well and making sure that you're charging an appropriate or premium price because you deliver good results. And then developing referral partners for the other parts of it that don't fit in that core competency. Or if you do have multiple founders who have specialized in different disciplines, just making sure that someone is focused on each of the key service delivery lines and that you're not dropping the ball. Because As you found, eventually the chickens come home to roost, and you realize that you don't know about that particular area, because there's in digital marketing, there's so many different facets and specialties. So it's making sure that, you're delivering good work.
So just curious, I know with a lot of things in life, it comes down to mindsets, right? Like, I mean, we learn all these theory, all these things, and sometimes it's this underlying subconscious things that we say to ourselves that keeps us having the problem. What bad mindset or limiting mindset do you come across when you're working with the types of clients at like a marketing agency?
I used to work in like film, in the finance team in films as well. And I saw this a lot with creative people in general. And that's just an aversion to even wanting to look at their numbers. They had a classic ostrich syndrome, head in sand. And if it didn't excite them, or they kind of thought they hadn't caught up on the bookkeeping, they're like, that was always the thing on their to-do list that would fall down it and then fall off it.
Yeah, so, I'm not good with numbers. I hate numbers. And because of my belief with that, yes, I agree with you. I avoided it. And then I also underestimate my ability to learn it.
What I try and bring is some simplicity in how people are looking at their numbers. So I really condense their profit and loss into like 5 key numbers. And I think humans, most of us can count to 5. So we can look at 5 different numbers. We can even cut it to 4 if they're averse. I think it's just the way that people have formatted their reporting and how they're digesting that information. You need to make it simple and bite-sized, so we still know what's going on in the business, but it's not this overwhelming spreadsheet that kind of, for someone who's not super confident with it, will obviously scare them. So it's about trying to simplify it and simplify the messaging as well a little bit.
So the limiting belief is I'm not good with numbers. I don't like numbers. Anything else that you think that could sabotage the success of knowing your numbers and improving your profitability?
Those are the big ones, but I don't have time for it. I'm too busy. That's for my accountant to do. I mean, if you want to be a business owner, you need to have an area of all the key areas of your business, and your finances are a really good one. And you can outsource the bookkeeping to someone else to at least get you some reports each month, and then just get someone to help you format them into a really simple way for you to understand it and then have a look at it. I think that's a great start. So it's like any problem in life. You have to front up to it, engage in it, and be prepared to kind of invest a little bit of time. And you don't need to know everything. You just need to get to a level where you understand the basics and you're no longer scared of it.
Okay, cool. So then what would be the best time to engage someone like yourself, CFO? Like, let's just say there are a certain agency that is just starting out. Maybe they're still just developing their product, right? So let's just say, I'll give you an example. I have a new company service that I'm just still validating the exact service. And so it's kind of, I feel like it's still amateur. There is some money coming in, but you still validate, right? That's part.
Yeah.
It's quite clear once you've got a clear service and money rolls in, and definitely, you just want to know the numbers clearly and have someone there. It'd still be helpful in that sense when you kind of still testing out your services.
I think making sure that the business model is correct and that everything's in the right ratio could be good to get a second glance to say, hey, look, yep, you're on the right direction. That looks like it will work, or it's feasible, or that will grow well. But obviously it comes down to the budget in the business, and someone who's bootstrapping to begin won't have budget to pay for those kind of additional services. So it's about, and that's where Profit First is a really handy system. It's a book you can get on Kindle or buy physically and read. That gives you the basics of what ratios you should be kind of putting aside for certain things.
Yep.
And then, if you're ticking that off, then you're on the right track. And I kind of normally step in as a virtual CFO for more detailed analysis and looking at kind of trend analysis and reporting. And it's when the business is on that growth journey, I feel like is where they really get the most value, kind of once you've hit that kind of 100K annual revenue and you want to scale up to 7 figures, that's where they really get a lot of useful information about doing cash flow forecasts and how profitable are we and when can we hire a team member. All those kind of bigger problems is when I really start to add a lot of value.
Good point. Okay, so in terms of the financial team, the accountant does tax, the bookkeeper does the everyday transaction, trying to make sure it goes into zeros and whatever else. And then you're there as almost this finance coach that can help when it comes to scaling. Like you're like we're starting to hit stability in our services. How do we grow and how do we hire more people and making sure we still hit our profitability?
Absolutely. So I not traditionally would step in. I've got some clients who I speak to weekly, I've got some I speak to fortnightly. But if people are just getting started, generally my kind of cheapest plan is to speak to them monthly, and we have a look at the results. And the first probably 10% of the call is, here are the results. And the other 90% is, how do we change those results? And that's what really interests me, is how do you improve a business? How do you grow it? How do you drive performance? And that's kind of why I got into this, is that I was an accountant sending people reports, but then I knew they'd never read them. And I'm like, this is ridiculous. And I love speaking to people and I love helping businesses grow. So that's why I stepped into this virtual CFO role, because I get to actually help try and drive and grow businesses, which is really exciting.
I love that. Okay, well, this will wrap up our chat today. Is there something that you want to leave the audience with to remember? Like, what is it that they need to remember to scale their business? Balance.
That's good advice for life as well. It's making sure that everything's in the right kind of balance, and that you're not spending too much in one area, and that you're growing at a profitable level, and that you've got good net profit left over at the end of the month. And for a lot of people, they're not doing a cash flow forecast. If you want to kind of level up your skills, maybe looking into the future and trying to plan ahead when you might hire a staff team member. And I can give them a template to help them do that. Really simple Google Sheet template if they want, and we can link it in the show notes and we can give that to them. And that's kind of another level where you actually not just looking backwards and looking at like, how did we go? It's more, what are we doing forwards and how do we grow things and what's the next 12 months looking like? So that's the next level. Once you understand your numbers, you've simplified them to 5 or 6 key numbers that you're going to look at. Adding that future kind of perspective is that next level up.
That is cool. Yes, please do send me that link. Where else can people find Michael Wark from? Where are you?
So in the world. So I'm on LinkedIn. So it's just Michael Wark, W-A-R-K. So people feel free to get in touch, drop me a message, and I can try and point you in the right direction if you need some resources or links. And happy to have a chat with people there.
Awesome. Thank you so much for being on our chat today. I really learned so much, and I do want to talk to you after this call as well.
Okay, awesome. Great. Thanks for your time. Cheers, bye.
Well, thank you so much for watching, guys. If you like more videos to help you grow your business, check out my other video here. If you have any comments, love to hear from you in the comments below.